Anyone looking for a shock and awe from the Federal Reserve got a dose of disappointment today. The Wall Street Journal reporting that Ben Bernanke and the Federal Reserve will take a slower, more cautious approach to quantitative easing. Market reaction to that story was less than enthusiastic, and Courtney Donohoe has the latest from the New York Stock Exchange. Courtney.
Well, hey there, Pimm. A drop for the S&P and the Dow today, and the main reason, the economy. Durable goods, that's those items that are meant to last a long time, like refrigerators and washing machines. Those orders dropping in September. And if you add in transportation spending, we did see some gains led by a demand for aircrafts, but business spending weakened. Ex-aircrafts number giving the Fed another reason to ease policy next week. Manufacturing helped bring us out of the recession, but the report showing us that business investment still struggling along. And as one economist told us, not growing fast enough for the Fed's liking and not fast enough to put a dent in the unemployment rate. But some investors speculating that the possible moves from the Fed next week won't be enough to give us that kickstart. But staying with the economy, sales of homes rose in September for a second month, increasing 6.6%. But we're still hovering near those record lows. The lack of jobs preventing many Americans from gaining enough confidence to go out there and buy a home. So even though we have these record low mortgage rates and those bottom of the barrel house prices, people are just scared and they're not sinking money into buying a home, Pimm.
Now, Courtney, one of the worst performing stocks today was Sprint. The stock getting crushed because, well, disappointing earnings and also having to do with subscribers. What went wrong with Sprint?
Exactly. Well, down almost 10% today in trading. The company reporting a loss that was much bigger than forecast. Sprint seeing a loss of 30 cents a share for the third quarter. The carrier, they subsidized some of the cost of their new handsets in exchange for a contract, and then they hope to get the money back during the length of the contract signed. So Sprint expanding its 4G network to 20 new markets, bringing it up to 56. So a lot of people got new handsets, but those subsidies for those phones weighing on margins. Sprint CFO saying, though they incurred costs to bring in new customers to the network, it's money well spent and an important factor in turning around the company's financial performance and growing its customer base, he says.
Thank you very much. Courtney Donohoe reporting from the New York Stock Exchange.